A friend of mine, his wife is an insurance broker in California. Now, apparently lots of insurance companies there are quietly closing blocks of business by certain zip codes or limiting how many policies in 1 month that they will let an agent write. This way they can stay off the radar or don't make the news like State Farm. Now, apparently they've seen insurance premiums triple at best, if not 4 to 5x the premium. Now, she tells her clients not to let their insurance coverage lapse because, if there's a mispayment, insurance companies are just looking for a reason to drop you. It's bad. And they're worried they may have to change careers for the first time in their 20 years in the industry. Another one, different realtor. They're starting to have deals fall out when clients can't find insurance coverage or the premium is just astronomical. Especially if they were really close on the debt to income ratio, the insurance premium puts them over. And it's going to get ugly, folks. They're calling it the California homeowners insurance crisis.
More and more insurance companies have stopped writing new policies. The most recent, Allstate and State Farm. The company sent a statement saying it was to protect current customers and that auto insurance was not affected. But when we spent time at May's insurance business, that was not the case.
I just want to show you that how hard it is.
May says he could typically get at least 14 quotes for a client. And now...
And watch all the rates that come up. Not one.
And after clients sign up, chances are it will take up to 20 days to take effect.
Did you drive?
Yes, I did, because I know everybody works. Just trying to make sure that I was driving carefully.
Understandable.
Even grace periods are gone.
And you know what happens when they don't have insurance? Well, the banks actually end up owning your house. When you secure a mortgage to purchase a home, the lender usually requires you to maintain home insurance as a safeguard for the bank's investment in your purchase. While home insurance isn't technically a legal obligation, sometimes banks make it a requirement. And so the lenders require insurance because the property itself serves as collateral for the loan. This ensures that if the property is damaged or gets destroyed by, covered events like fires, natural disasters, basically the insurance company would cover the repair or rebuilding costs needed to protect both your investment and the bank's loan. But if you don't uphold your end of the agreement by either defaulting on mortgage payments or not getting insurance for the property, this could be a problem. And so the lender could ultimately initiate foreclosure and the bank takes ownership of the property to recover the unpaid loan amount. Without proper insurance, you could struggle to afford the necessary repairs. That's a risk that the bank doesn't want to take on. That would mean a decline in the property's value and the house could actually sell for less than the remaining mortgage balance. So yeah, either they force you into foreclosure or surrender ownership due to financial hardship, potentially leaving you without a place to live. And then you're now another statistic to homelessness. But that's the whole scary picture here. And that is exactly the kind of thing that is happening in California right now. Allstate, one of the nation's largest insurance companies, has just joined State Farm in deciding to halt sales of property and casualty coverage to new customers in California, basically saying it's too pricey to underwrite policies in the state, which has seen thousands of natural disasters in recent years. And like my friend shared earlier, Allstate quietly stopped issuing new policies in California months ago, but didn't announce the move until recently, especially since Allstate was one of the fourth largest insurers in California. This is a big problem, folks. It earned a respectable $4.3 billion in premiums that year, and it incurred about $2.6 billion in losses. Now, apparently Allstate said that the cost to insure new home customers in California, it is far higher than the price they would pay for policies due to wildfires, higher costs for repairing homes, and higher reinsurance premiums. Plus, according to California's Department of Insurance, the CDI, insurance companies that cover property may be required under California law to cover living expenses such as emergency shelter and food, personal property, and valuables, as well as damage to the property and other buildings or structures in it. Let's not forget about the removal of trees, shrubs, and debris, water damage not caused by the flood. Oh yeah, so Allstate said that the state doesn't allow insurers to quickly adjust their rates to cover the increased cost for disasters. So basically, it makes the insurance company inadvertently take on more risk than it's willing to do. Now, just for context, if we go back to 2021, California experienced at least 7,400 wildfires, which burned nearly 2.6 million acres of land. Now, the state had an additional almost 7,500 wildfires that burned 362,000 acres last year. And you know how often wildfires have been on the news lately. Allstate's announcement comes just days after another major insurer said that it was backing out of new home policies in California, State Farm. The company also recently announced that it will no longer be taking on new customers in the Golden State because of what they called rapidly growing catastrophe exposure. Not to mention, California might just break off of the United States and float off into the Pacific Ocean. I guess that could happen too. Now, among other things, State Farm was one of the largest property insurers in California in 2021 and brought in more than $7 billion in premiums that year. But they also incurred losses of about $4 billion. Now, state insurance officials said that State Farm's decision doesn't mean residents will be uncovered, since about 115 other companies will still write policies in the state of California. But Allstate and State Farm, they aren't the only insurers to stop or to limit property insurance coverage in California. American International Group, also known as AIG, y'all remember them, right? Yeah. They notified thousands of Californians that their policies would not be renewed. Some auto insurers also began stepping away from California this year. There's a pattern here. I think you guys are seeing it. And so these auto insurers that were stepping away from California this year, they're saying that it has become just too expensive to cover drivers. Auto insurance losses in California spiked 25%. Meanwhile, premiums only increased by 4.5%. You can do some basic math here and see that this company is not going to be able to continue to do this pattern. And that was only between 2020 and 2021, according to the American Property Casualty Insurance Association. Now, I've heard of people, they've been with their insurance company for over 40 years, and they got dropped for all sorts of ridiculous reasons, like having woods around their house. Now, they did find another insurance company to insure them, but it's scary to think what would happen if they could not find a new insurance company. Have you guys heard of stories like this where you live? Let me know in the comments down below, guys. And hey, make sure you're always updated with the latest financial developments. Be sure to subscribe to the channel now and also tap that notification bell too. I appreciate the support, you guys. You guys really make my day, especially when you light up the like button like you always do. Let's keep the financial freedom fam going. The road to 500K, guys. We could do this. Let's get to 500K. But seriously, so I got another story for you guys. So a Bay Area man who was told that he lost his insurance based on photos taken by a drone over his property, it came to him as a huge shock. So at first he was told he lost his insurance because drone photos taken over his property showed hazards in his yard. Now, first of all, did you know that your insurance company might be flying drones over your house? But the company would not show him the pictures. Later, he was told that there was no drone, just aerial photos. He definitely felt that this intruded a little bit on his privacy. Okay, maybe a lot of it. And he was left with no way to reinstate the policy. Now, according to the guy, apparently they have some pictures and they noticed some clutter in his backyard. So his house is not in a fire zone and he's never filed a single claim in the 15 years that he's had insurance with his company. But instead, the notice said CSAA found debris, hazardous conditions, tires, or dilapidated cars in his yard and whatnot. But how would they know that? No one ever came by to inspect. So he called the company and they said something like, oh, we sent over a drone. And like they have a drone that they sent over his property. Yeah, just flew on into his yard. Then later, the CSAA walked back what they said and told the guy that they didn't use a drone, but they do have what they call proprietary aerial imagery to assess risk. So, well, what else is there? It's either a drone or maybe a satellite, but definitely some disturbing stuff here, guys. Makes me think it's more like a drone because like a satellite wouldn't necessarily give them real-time data, or maybe it would. But this could signal perhaps the largest transfer of wealth. It's quite simple why home rates are climbing with rising imports and falling exports. Meanwhile, the Fed is to lower housing costs later on. Otherwise, something will eventually break if they keep the quantitative tightening and high interest rates. With more homeowners getting dropped, here's what to do if your property insurance is canceled. Now, for the moment, you might still have choices if you do get dropped. So step one, immediately take action. Don't wait, guys. Open all the mail from your insurance companies as soon as possible because you'll likely only get like 75 days notice when they decide to cancel you. Second thing I do is shop around. Now, obviously, this is not financial advice, not a financial advisor, not an insurance broker or anything like that. But this is what I would do. So I would definitely shop around. Other companies could still insure you. There's still a few companies that may be able to help out. Now, one example I found, Kin. What they do differently is that they use software that monitors weather systems and it accurately pinpoints which houses may be damaged. The company can then proactively reach out to the homeowners to determine if a claim needs to be filed. thereby cutting out potentially predatory contractors. Now, if your search goes on for days or even weeks, you should definitely call back the insurance company that dropped you. When their computer models get new data, they might actually change their mind. And so basically the situation just keeps shifting. One week you might call and get turned down by an insurance company, but then you call them next week and they might offer you a great policy at a great deal. Third thing I would do, find some help. Try calling an independent home insurance broker who can find you a policy at maybe a lesser known company. Sometimes these brokers are the last call that people know to make before they end up calling the California Fair Plan. Now, speaking of, that is step 4. So the Fair Plan, it's like the final fallback. So the California Fair Plan essentially is the state's fire insurance pool of last resort. It takes in anybody that the brand name companies reject. The number of people dumped into the Fair Plan has almost doubled since 2018. Now, the problem with this Fair Plan is that it's very expensive and it only covers basic fire coverage right now. I don't know why they call it fair, because that don't sound all that fair to me, which means no coverage for things like downed trees, theft, pipe bursting, or even liability. So you'll likely end up buying 2 insurance policies, one for fire and one for everything else. I guess it's better than nothing, but definitely a long way from great. Now, if you live in Florida, having a plan could actually help you lessen your risk of receiving an insurance non-renewal. There's nothing you can do to prevent the company from pulling out of your state, but there are steps you can take to make your home as insurable as possible. So check your roof often and fix any small problems as they come up. Now, if you can, change your roof before it's been around for 15 years to avoid insurance issues. Now, in Florida, the law states insurance companies have to give you discounts if you have things like strong straps for hurricanes and strong roofing. These things can help keep your home safe and also make insurance companies more interested in covering you. They may even give you discounts. Also, keep an eye on your whole property, not just the roof. Look for any damage on the outside of your house and trim any big tree branches that could potentially damage your roof if there's a strong wind. This will definitely make it a lot easier to get insurance if you happen to need it. Well, guys, if you made it this far in the video, do your boy a favor, drop a quick like for the video. Also consider subscribing, and I look forward to seeing you guys on the next one.